Our next guest is going to be the best person to tell us what industry wants, or more clearly, what industry needs from the government. Sunil Munjal, the Joint MD of MotoCorp, joins us now. Good morning, Mr. Munjal. Thank you very much for joining us. I won't call it a wish list, but what's a reasonable expectation that this budget can do to spur what is almost a comatose capex cycle in India?
So there are two or three perspectives here. One is what is necessary in the overall economy. Two, in capital formation. And third, as you mentioned, in the manufacturing sector itself. I think it is important to figure out a series of steps which will bring investment back into the economy. And for that, starting from manufacturing, I think there is a need to make the investment allowance cycle more user-friendly, which is allow it on all investments, allow a spillover if you're not able to utilize investment allowance, like you have in depreciation over a period of time. As also look at bringing higher accelerated depreciation on all activities related to innovation, research and development. Because while we have permitted R&D, but new buildings for R&D, new activities for R&D, all of that also needs to be brought in. So that we don't only start manufacturing, we start becoming amongst the better manufacturing nations in the world. And that is the only way for us to build manufacturing as a base, which will focus on supplying into India and also globally.
Okay. Mr. Munjal, good morning and thank you for joining us. I just want to belabor a little bit on this point about increase in capex or expenditure by the government. You know, if you look at the past 5 years, then the non-defense capex has been only 1% of GDP that the government has spent. This time around, there is an expectation that that could be increased. How much do you think it could be increased to? And how do you think the government will tackle the state's capacity to go ahead with this expenditure?
So again, I don't think we need to focus only on the non-defense, because defense is also being marked out by the government as a big new area for growth, especially for manufacturing by Indian enterprises, which is why they've changed some of their policies on defense procurement. And it is clear that that is a large budget which has to be put out. Earlier it was put out for imports. That will likely get put out for Indian procurement now in the future. So on the state side, I think it's very good that the government yesterday accepted the recommendation of the Finance Commission, where 42% of the revenue will get passed on to the states. So the state's ability to fund projects, to fund new enterprise, to support manufacturing has gone up dramatically the moment this gets actioned. Besides this, it is clear that at this rate of capital formation that we've had quarter on quarter for the last 13 quarters, we've had growth only in one quarter in 13. It's fallen every other quarter. There is a need for us to bring capital formation or investment in creating new assets up. In the previous budget, by the way, I'm not talking about this government, in the previous budget, we actually had close to a 79,000 crore reduction. And most of that reduction went from plan expenditure, while the non-plan expenditure actually went up. And the plan expenditure was such which would have actually had not just direct benefit, but a multiplier benefit in the overall economy as well. I guess because of the FRBM constraint that we have put on ourselves, there is an issue. But at this moment, with the oil prices being where they are, with the benign inflation in India, I think there is a unique opportunity to do something special to boost the ability to create additional investments, both in the public sector, by the government's own budget, and also in the private sector.
Okay. Well, actually, what Sonia was pointing out too was really, the myriad permissions that one needs from the state government and whether the center will be able to influence that. But Mr. Munjal, you must permit me one diversion. Since
I can talk about that if you like.
I want you to. But since you took the diversion into investment in defense, I just can't resist myself from asking, are you, as your family, Munjal family, getting into defense in a big way? Should we hear something in terms of your buying stake in Pipavav sometime soon?
I think you should know better than to ask a question like this, because these kind of speculative reports are things that as a policy and a philosophy we never comment on, and that's really not a
all right.
not a point
I will leave it, sir.
But just going back, I do want to go back if you have half a minute. I think you made an interesting point which actually I missed out. The ease of doing business is probably the single most important thing that government can do today to help industry grow, and to look at all three aspects: setting up a new business, operating an existing business, and also shutting down or exiting a business if required. All three need to be worked at by removing the physical interface between government and industry, by automating all that needs to be done, but by writing a new, fresh set of rules which are simple, easy to understand and easy to implement, and which, if flouted by intent, will have a consequence of punishment which is quick, impartial, and effective. And I think both things are necessary.
No, but Mr. Munjal, the government clearly has started on a very positive note. The transfers from the Finance Commission, though it is from a constitutional body, has come with such immediate welcoming and acceptance by the Prime Minister himself. Does this set the stage for the centre being able to influence states? See, this is not a budget issue. This is something which the Prime Minister can lead by example. He proved it in his own state. But do you see any difference on the ground in any state at all other than Gujarat?
I think there are a number of states right now who are very, very keen to attract investments. Rajasthan has made their intent plain. Andhra Pradesh, the newly formed state, is going out very, very aggressively. Other states in the north, even Punjab, is now saying we want to do more. So there are a number of states from whom over the last year or two one has been hearing murmurs and some actual action. Not enough, but some actual action in these. I think this is a great opportunity for the smarter ones to seize the day almost. Bihar, in fact, has made a new set of comments only lately with the earlier Chief Minister coming back, that they would create an environment which is welcoming for investment and for industry. Because I think there is clear realization today in governments or in states that unless they're able to create additional industrial and economic activity, the ability to create a million jobs every month in India is going to be very, very tough. And this will happen in states. The center really is going to be only a facilitator. It is going to happen in state after state after state.
Okay.
And we do hope that they will, some of them will make a quicker move, some will be slower, and which is why we have been talking about GST for so long, to take away, at least on the taxation side, all the burden and the cascading effect and the need to stop at every state border, to truly turn India into one common market. And we do hope that will be one of the announcements you will hear with an actual plan laid out and a terminal date. And I wish the Finance Minister would also announce a new revised FRBM, which is more realistic, more transparent, and more in keeping with what's going on in the world today.
Absolutely. In fact, I wanted to come to that point, Mr. Munjal. Apart from GST and FRBM, there is also a lot of expectation, that things like MAT would be lowered for infrastructure projects, for SCZs, for SMEs. Also, there is talk on, boosting infrastructure bonds, to higher tax incentives to infrastructure bonds, basically. How much space do you think the government will have to actually undertake these kind of taxation incentives?
So a few months ago, I would have said almost no room. But now, as I said, with the oil prices being where they are, because that is one of the large import bills of India, and inflation being under check now for a while, I think there is room to play a little bit today with the central government. And if they can up their budget for disinvestment from public sector enterprises, especially those which are loss-making. So because on the loss-making ones, on the one, there's nothing coming back to the government. In fact, the government is actually continuously funding some of them. This would be a win-win for all concerned. But that is one set of headroom. The other is to make the taxation regime simpler, easier to comply with, and widen the tax base. We have to do that, because if you don't, you're going on putting the same additional pressure on the same few taxpayers that you have as a nation. And that becomes almost unfair after a while. And I think it's easy. It's an easy enough thing to do. By the way, politically, it will be a tough call, but it needs to be done. And one of the issues people have commented on is that after the Delhi election results, will the government continue to take the developmental path in this budget as was expected? And I hope and I wish that they would continue down the same road, because that and only that can allow them to create prosperity in India and then distribute prosperity to all the citizens across the nation.
Well, the Prime Minister is a veteran of several election rounds in Gujarat, and he maintained his stance.
Correct.
So we should give him the benefit of doubt, at least now. Mr. Munjal, there is also one expectation that some of those service taxes and excise duties could go up. This could be in preparation for the GST. Also, we have not gone back to the level we were in 2008 when, post the crisis for stimulus reasons, the taxes were cut. We didn't quite go back. If that were to happen, even by a smidge, would it really be negative?
So at this moment, when the market is, the return in the growth in the market is very, very nebulous, very slow, and it's very patchy across India. It's not across the board right now. In fact, rural areas have seen a decline, as you know. I think it would hurt the market, certainly temporarily, but there's also a need for us to go towards a single GST rate. And it may be better to do it in phases rather than do it in one day when the GST gets implemented. So even though it will be a tough call, it may actually have to be made. And we have to be realistic as a nation. Our expectations of government need to be realistic. Our ability to support the government's growth program also needs to be realistic. So I would imagine some of that may happen. But on the MAT that you mentioned, it's absolutely important that MAT is not just brought down. Logically, SEZ should have no MAT at all. There are a number of issues like investment allowance should not have a MAT set off. Because then you're taking away the incentive you're giving itself. So there is no incentive in that case.
Yeah, that's how they began. So it is a bit of a reneging of promise. So that's a very statesman-like position if a leader of industry adopts the position that, some increase in taxes will have to be allowed. Mr. Munjal, you just mentioned that recovery of the consumer is patchy and that it is non-existent in rural areas. It is good to hear that it is even patchy. Is the consumer really coming back? Is there a recovery?
Yes, in parts you can see the consumer coming back. It's not across the board in all verticals, and it's certainly not across the country, but the early signs are there. The recovery clearly has got pushed back. We were expecting to see full recovery earlier this year, but it looks like we are pushed back by anything. Could be 6 months, 9 months. It's a little bit hard to predict right now because there are many moving parts. And I guess in some sense the coming budget will also define some of the things that would help the recovery get quicker or go on at its normal pace.
Okay. Just as an aside, sir, global markets, are they also less helpful than they were, say, 6 months back? Or do you think the inroads you made in that space are advantages that you have still retained?
So the global markets are certainly a benefit for any Indian enterprise who can expand beyond the Indian borders. The issue is the global markets are slow right now. Barring the US, most of the major economies are slow. Even China is slowing down right now. Europe, interestingly, has started to show parts of Europe, not Europe, maybe incorrect. Some of the countries in Europe have started to show some minor improvements, like the UK, interestingly. And even some countries which are almost completely written off, like Spain, are actually showing an improvement. Italy, they're saying, will be the next one which will improve. But there are some which will still take some time. So for Indian companies who are focused on the global market, it is a tough time, but there is a small opportunity there.
Just one final question from my end then, Mr. Munjal. Is the private sector ready, or does the private sector have enough appetite to participate if the government allows higher private participation? Because in this budget there is an expectation that for various sectors, for example for roads, there is a hybrid annuity model that is going to be proposed by the government, where they will invite higher participation from private sector. But do you see a higher appetite or confidence from the private sector to participate?
So the private sector is very wary right now because of the experience they had earlier. There was a great deal of enthusiasm, as you know, and when the first round of tenders were given out, projects were taken up, some got implemented very quickly, and then the process of clearances became cumbersome and slow. And financial closure became very, very hard to come by. And some of the companies suffered. They got over-leveraged because of the large loans they had taken. So I think people will watch to ensure that the current the framework is one which is workable and can be implemented in a reasonable period of time. If that be the case, it is a very attractive sector, by the way. The hesitation right now is because of the experiences some of the companies had. But as a sector, it is certainly a good sector. It allows massive investment at the beginning and a regular annuity income to come in over a period of time. So both sides, it's a good sector. And I just want to go back for a minute to the international market.
Yes, sir.
I think for those companies in India which have started approaching the international market, it is actually a big step up because it offers completely new markets from the one they've been focused on in India. And we've seen the experience ourselves as a nation going to 22 countries in the last 2 years, that it gives you fantastic exposure, very good feedback on markets, and a new opportunity to grow the markets.
Okay, it was a pleasure speaking with you, Mr. Munjal. Thank you very much for joining me.